Hey everybody, what's going on? It's James here with Crypto Common Sense, and I wanted to sit down this evening and shoot a cryptocurrency update video. We'll talk a little bit about Bitcoin, but I also wanted to talk about trading options because I've had several people over the last 6 months or so ask me about options because I had talked about the fact that I was venturing into that arena. So I wanted to talk about that a little bit today and kind of show you guys what that's all about. Before I jump into the content for the video, please do me a huge favor, hit that thumbs up button. Make sure you subscribe to the channel if you have not already. And of course, don't forget to check the description for a link where you can join Patreon for just $7 a month. That helps to support the channel. And if we get to 500 members, I'll start creating some software or releasing some software. I've got a few pieces of software actually that are already in development. So the first thing I wanted to say is, guys, I do most of my stock trading on TD Ameritrade. I use an application called Thinkorswim. It's a little bit more advanced than Robinhood, but I decided to use Robinhood for this video because number one, I do have a little bit of money over there, and number two, because I feel like its UI is actually a little bit easier for people to understand, and for new people starting out, the less obstacles the better, right? Trying to figure out Thinkorswim and all that. It's a bit of a headache at first. So I'm not going to go through all of the details of options because that would take several videos and a few hours to explain everything. What I'm going to talk about today specifically is puts, and more specifically I'm going to talk about buying puts. All right. So a person would buy a put when they were bearish on an asset. And what a put actually does, so if you go to put and you click buy, there's a few things that you need to be aware of. There's what's called the strike price, which is displayed over here, and then there is the expiration date on the contract. So essentially the way this works is, let's say that I buy a put for $45 strike price, and let's say that it expires on December 17th of 2021. What that means is I am buying the right to sell 100 shares of this stock for $45 on or before December 17th. The way that bearish traders make money off of this is, let's say that I buy this put today and the price drops to $30 a month from now. Well, then obviously I'm going to make $15 per share, and a contract is 100 shares, so 15 times 100 is $1,500 I would make gross. But I have to subtract this cost. And this says $8.63, but that's not actually $8.63. If you're buying it, you're going to pay the ask price, which is $8.70, and it's $8.70 per share, and one contract is 100 shares, so it's actually $870. Okay, so $870 is what this contract would cost. If the stock does not fall below $45 before December 17th, or if I don't execute the contract, it will expire and I'll lose my premium, my $870 that I paid for it. The nice thing about puts is your risk is limited. I can't lose more than what I paid for the put. Whereas let's say that I just opened a naked short on NEO, and let's say that NEO right now is $43. Let's say that NEO went to $100, right? Well, obviously I would be down, roughly $56 and change per share. Well, if I had 100 shares short times $56 per share, I would be down $5,600. Whereas if I bought a put and it went up to $100, I'd still only lose my premium. That's the major power of options. And these can be really profitable. In this case, NEO, these are fairly expensive puts. NEO would have to drop over 16% just to break even, right? So they show you here that the break even price is $36.37. So if NEO fell to that price, you would break even on the profit you make here after considering what you paid for the actual put itself, okay? Which is not quite right, because again, you're going to pay about $870 in this case, not $863. That's like an average of these two numbers. But what you can do, and this is where things get a little bit fancy, but it's really kind of a neat strategy. One thing that you can do with these puts is, let's say that I'm not worried about the $45 strike. Let's say that I want to buy a $35 strike. Okay. Well, this is what's called out of the money, which means that right now it's, the price is above this. And so it makes it much more affordable. You can see this one would only cost me about $375. Okay. So I can buy this one for $375 And then if NEO does not fall under 35 bucks, again, I lose 375 bucks. But there's a way to further limit my risk. Let's say that I think NEO is going to fall to $25 before then. Well, what I can do is I can buy this put for 375 bucks. I can go down here to this $25 put, and I can actually sell a $25 put. Right now the current bid's 73 cents, so $73. And what that does is I just subtract this from this, okay? So now my actual risk is about $3.02 per share, or about $302. And ideally, the stock would fall to 25 bucks or below, and I would make the difference between 35 and 25, so $10 per share. So my maximum upside would be, $1,000 per contract, because 100 shares times $10 per share is 1,000, and my maximum loss would be $302. So if you think about it in terms of trading, we're always looking for at least 2-to-1 risk-reward ratio. Well, that's actually about 3-to-1. Okay, so that's kind of that's a crash course, and I'll probably do more videos later. If you guys like this and you want to see more videos like this, let me know. I'll look at doing more later. There's all kinds of different expiration dates, and of course, the closer the date, the cheaper the options are going to be. So, for example, if I chose one like June 11th, which is just 4 days from now, right? Then suddenly a $45 put is only 198 bucks, or a $35 put is only 2 cents. So 2 cents times 100, $2, right? This is what it would cost me to buy a $35 put for this Friday. $2. But let's say something catastrophic happens between now and Friday. Let's say that NEO suddenly drops to 20 bucks, right? Well, then I'm going to make $15 per share times 100. I'll make 1,500 bucks on $2 worth of risk. And that's where options really, really get lucrative. Or if you take a look at like the AMC people, a lot of AMC people were loading up on really cheap call options, which is the opposite of a put. It's where you're bullish on a stock. They're loading up on super cheap call options, buying 10, 20, 30 contracts for a couple $1,000. And then when AMC went up to 20, 30, 50, $70, they were able to cash those in for tens of thousands, in some cases hundreds of thousands of dollars. All right, so options is a really, really neat thing, and it's automatically a risk limiter. I really, really wish that I had access to options on cryptocurrency, because it would help not to get washed out on all the stop hunts and things like that. But if you guys are interested in more option stuff, let me know. Maybe I'll shoot some more videos on it. Like I said, I don't want to spend too long on it today, because I don't know exactly what percentage of my audience cares about options. What I will tell you guys is, if crypto was to die tomorrow and go to zero, that I would probably spend all of my energy focused on trading options. I really feel like they're that powerful. Okay, it's almost like getting leverage without all the risks of using high leverage. So with all that being said, let's jump over to a Bitcoin chart. I'll be totally honest with you guys. I haven't paid that much attention to Bitcoin the last few weeks. I haven't cared that much. At this point, I'm still waiting to see if this does come back up and test this old demand zone, flip to supply, this $45,000 to roughly $49,000 zone. I'm still waiting for a touch of that zone. Now, it may or may not come, but I'm not going to panic and start opening shorts and FOMOing into short positions down here, because the risk reward just isn't really there for me personally. I was watching this ascending trend line. It started to look like it was trying to put in some type of triangle. And it does appear at this point that it's trying to break south of that triangle. So that's something that I want to keep an eye on. But I'm also going to watch the volume for confirmation, right? This volume, it's still fairly low selling volume. So this could absolutely end up just being more of a flat channel, something like this. We could end up with some type of, range developing here where this goes back up, and this does end up being some type of bear trap like I talked about earlier. So I don't want to FOMO into a short position. There have been some really good opportunities on the smaller time frames, like the 1 hour charts have been giving up a lot of entries, and the 5-minute charts have been giving up some pretty good entries if you've been watching those. But overall, Bitcoin is just consolidating, and just like it consolidated up here, patience, that's kind of the key if you're trying to swing trade or position trade this stuff. It's been pretty cliche so far. It came back up for a bearish retest of the 200-day moving average. It was rejected pretty soundly. It's had a pretty strong move down. It's moved down over 20% after being rejected. So that's more confirmation that this is indeed a bear market. Bull markets trade above the 200-day moving average. The other thing that we're seeing that makes me feel more confident as a bear and that this is indeed a bear market is the fact that our 50 is curling down very, very strongly, and our 200 is starting to flatten out. And it won't be long now at this rate. We'll end up getting a cross here. We'll get a death cross on the daily chart, which is certainly something we want to keep an eye on. Okay, but big picture, we're still inside of this whole zone of demand from back here. Okay, so this battle is still being waged. You still have the bulls who are, trying to push it up. You still have the bears who are trying to push it down. And it's really, in my opinion, it's just a matter of waiting to see which side comes out ahead. I do feel like they tried to put in a fake double bottom, which ended up being a liquidity play. If you look here, it came down, it came up, it came down, came up perfectly, touched this neckline. And I'm sure there were some people who decided not to wait for confirmation and said, that's a double bottom, I'm going to long it. And they were longing right in the big money shorts, right? And instead of going through and then doing this, it was rejected in a big way. So I'm not in a big rush. I'm just not in a big hurry on Bitcoin. I learned my lesson through 4 years of doing this, that things move at their own pace, and getting in a rush, getting in a hurry typically does not end well. It's the same thing that, the same example that I've used many, many, many times is this example back here in late 2019, right? I kept waiting for the $9,500 retest, kept waiting. I lost faith along the way. Over here on this initial bounce, I ended up going short, thinking it's just not going to get there. And then I ended up losing a lot of money because I didn't stick to the original plan, which was to wait for that $9,500. So I will not make that mistake again. They say the best lessons are the ones that are most painful, and that one was certainly a painful lesson. I lost, several percent of my trade fund that day, which was odd because normally I keep my risk to no more than 1% per trade, and I ended up risking several percent, not double digits, but pretty damn close to it. So that took about 31 days for that range to resolve itself before it finally broke up. And then, of course, that was just a big fake out and right back down. So I am going to kind of expect something similar over here, right? We're only about 20 days in. So if this takes 30 days as well, it would put it somewhere in mid-June. And then possibly we get some type of break up to the zone. And yes, I will be leaning, to the bearish side and looking for shorts if that were to happen. I don't know if it will happen, and I don't know that it will be bearish. If it happens and I go short, it's still absolutely possible that I end up getting stopped out. That's just the way trading works. But, that is the zone of supply, and I believe it's somewhere around the golden pocket as well. Look at this from this last high back here. Yeah, so the golden pocket is right around that $48,000 level if you're drawing it from this last swing high back here. Okay, so that's kind of the levels. That's what I'm waiting for. $45,000 to $49,000 is what I'd like to see. If we take a look at a 3-day chart, not going to spend a lot of time on this, but let's take a look. We can see that we did get a fake double bottom down here. We hit the bottom of this bear market box. We got a bounce off of it. We tagged it again, and once again, it acted as support. So there were a couple of long opportunities there. They didn't work out too great unless you took profits early. Had a little 9% bounce in the first one, and then a little 10%, almost 11% bounce in the second one. But, I don't know that the RR was really there. But we're looking at this. There's 19 hours left, and it is trying to slip out the bottom. I don't believe it will. I believe it will close back inside that box. If it does close outside of the box, then I would have to take a hard look at my analysis and think that maybe we're not going to get back to this level after all. Because as you can see, historically, the only time price comes out of the bottom of that box is during capitulation events, which are normally bottoms before a new uptrend starts. So for example, in March of 2020, and for example in November/December of 2018, and then that's as far back as the Coinbase chart goes, right? Normally the bottom of that box will act as support and we'll get a bounce. So I am still waiting for that bounce, and just like I'm waiting for the $45,000 to $49,000 zone, I'm also looking for this RSI to come up and potentially have a bearish retest at the top of the box, like it often did in previous markets, like it did right here, for example, or like it did right here, for example. Boom, top of the box, rejected, right? So that's kind of what I'm looking for in a 3-day chart. On the weekly charts, what I'm seeing here is we're still really deep inside this bear market box. Again, this is not something that happened in the previous bull run, so just makes me lean more and more toward a bear market. I'm also looking at the fact that we had this really high sell volume here in mid-May, and then the bulls completely failed to step up the following week, and then even fewer bulls stepped up last week for this candle close. Very, very low buying volume. So that's a little bit concerning. I have been watching to see if it was going to play out like March back here, because we did get that big sell-off down and deep into the box. We did get the two green candles with the wicks coming out of the top, kind of like here. But the difference is there's a lot more buying pressure back here. There's not a lot of buying pressure over here. So if this does start to curve back up, same thing. I'll be treating it more like I was treating this area back here, where it came in and retested the top and then further downside, or like here where it came in, retest the top and then further downside. So that's kind of what I'm looking for there. The weekly chart still looks very, very bearish. We're also still underneath the 19-week moving average, which is currently sitting around $49,340. So again, that's a resistance level. Matches up nicely with that zone of supply. And in the previous bear market, you'll see it a couple times here, broke underneath it, came up for the retest of that line and further downside, retest the line, further downside, retest, further downside, etc. In 2019, broke through. Here's that period in October we just looked at. Boom, came up to retest that 19-week moving average, further downside. Okay, so that's what I'm looking at on the weekly chart. I'm not in a hurry. I'm completely happy to trade smaller time frames and wait for that move to that zone if I'm going to take any type of short that I get to brag about later, right? The type of short where you get short here and you get to ride it for a whole bear market. That's the 45 to 49K area for me. That's also the only area that I would probably be interested in selling off any of the spot that I have left. I have a very small amount of cryptocurrency left compared to what I used to have, but it's still a decent amount of crypto. It's certainly more than probably the majority of people on Earth have, just because most people on Earth aren't invested in crypto yet at all. But it's not a ton of money. But I do still have some money in there. I'm not looking to sell it off. I'm not looking to sell at these low levels. If it bounces back up there, however, I probably would sell off the rest of the Bitcoin that I'm holding. And then if it takes out the old high, then I could always buy it back at a loss. Okay, so that's what I'm looking at on the daily, the 3-day, and the weekly. If we take a look at the CME chart, what we're going to see is that the 200-day moving average on the CME did stop the initial drop. We did have consolidation, and we are currently retesting that 200-day moving average there. This is really a level that bulls need to defend. We don't want to see this level taken out, because then we could start working our way down toward these old gaps before we get that bounce that I'm looking for. They still have this open air gap down around 24,000. We still have this gap down around 18,000. And yes, we still have a gap down around 9,800. And yes, I expect that all three of those gaps will fill at some point in the next 12 months. Now, that's not what people want to hear, but I am of the firm belief that this will fill in all three of those gaps. The only thing that concerns me as a bear right now is not whether or not we're in a bear market, but how far into the bear market we are. I'm still kind of crossing my fingers that we still have a complacency bounce, and then the bear market really kicks off in a full swing. But so far, this has been playing out quite a bit like Wyckoff. And that leads me to believe that it's entirely possible that this was the complacency bounce, and that we're now down more into the anxiety level where people start thinking, gosh, this dip is taking longer than it's supposed to, right? And you don't get a big bounce off anxiety. You might get a little bounce, back to like 40K, which we already had. And I talked about that a few weeks ago. That was my concern, was that might be the only bounce we get. Also lines up with these levels back here, and then more downside. Okay, so that does concern me a bit. And of course, you're probably seeing it, but if not, I can point out that obviously we do have this wonky head and shoulders trying to come in. We also had this head and shoulders up here. So certainly has all the earmarks, of a bear market. And so I'm not looking to long any coins. I don't have any intentions of longing anything at this point until this gets done dropping, unless we're talking about like a scalp or something. And then, if you're looking at a 5-minute chart, you can long or short a 5-minute chart. You might you might have a 12-hour trade period, and you might take 2 shorts and 2 longs, or 5 shorts and 1 long, or 5 longs and 1 short. That's just, the bigger picture stuff doesn't matter too much. But it definitely does not look good right now. As far as altcoins go, I'm not going to talk about alts a whole lot today. They're doing what alts do, which is bleeding out versus Bitcoin, right? Most altcoins, when Bitcoin goes down, they overreact and go down more. And that's just the story of the game, right? Bitcoin's main use case is for trading altcoins. And if people are selling off their Bitcoin, then that decreases the demand for altcoins because people aren't trading for Bitcoin anymore. And so they go down worse. If we look at the fear and greed index, this thing is becoming more and more interesting to me. We can really see that, we're consolidating down here, and we can see that this works. Somebody had actually mentioned this probably last year, one of the people that watched the channel, and said, this may end up being like RSI, where there's no such thing as overbought and oversold. When it gets there, it just kind of stays there until it goes the other way. And I think they're right. We saw this, and this was part of the reason that I was very hesitant to be bullish on Bitcoin, was because we're in extreme greed. But I think this chart is poorly coded. And I don't mean any offense to the people that built it. I really don't. But I think they need to look at the metrics they're using, because this thing stayed in the quote-unquote extreme greed for months, right? Whereas I was looking at it thinking, okay, it's probably going to be like this, extreme greed, and then an immediate turnaround. But I think the only reason this turned around the way it did is because it was a dead cat bounce, up to the high in June of 2019 and then down, whereas this was an actual bull market. So just like in a bear market, you get pivots at highs. In a bull market, we'd see these quick pivots off the lows. But if this is now a bear market, like I think it is, it would explain why we're not pivoting, right? We're just consolidating. So definitely keep an eye on that. I could probably go take a look at a stock chart and find some more interesting things to talk about, but I'm already 28 minutes in, depending on how I edit this. So I think I will wrap up there. I think the biggest takeaway that I can offer everybody watching is patience, right? Also, make sure you have a plan and you know what part of your crypto portfolio is, for trading, and what part is for hodling. If you're constantly jumping around deciding which coins you're actually going to hold and which coins you're going to trade, you'll end up making big mistakes. Like everybody, I took a big hit over the last month on the coins that I was holding, but I haven't really, lost too much sleep over it, because those are investments that I'm looking at saying, these projects could be worth, much more in the future, and I'm not going to try to move in and out of them, every other day. Everybody in this channel probably knows by now that I hold some OMG and some EOS, and both of those coins have been slaughtered. I think both of them right now are down 65-70% from where they were a month ago. I'm still in the profit on both of them, so some people would say, it doesn't matter, you're still profitable. But actually, I take that back. I don't think I am in the profit on OMG anymore. I am on EOS, because my cost average on EOS was like $1 or something. But it doesn't matter. Whether it's profit or not, it's not fun. I'll just tell you guys, because it's not that big of a deal. I think I'm down like 20 grand just on those 2 coins alone in the last month. So sure, the 20 grand might have been profit. If it's still my 20 grand, it still ain't fun to watch it go down, but I'm not going to sell them, even though I actually do think they're going lower. I'm not going to sell them because they are long-term investments, and either they'll end up being worthless someday, which is a certain possibility, or there'll be projects that actually are able to push through with what they're trying to do, and they could both be triple, maybe even quadruple digit coins someday. So I'm not going to worry about selling them and trying to make $1 or $2 per coin here, when I could end up costing myself thousands of dollars or hundreds of dollars per coin in the future. Just not worth it to me. Okay? So, all that being said, please remember, I am some guy sitting in a spare bedroom, which means that nothing in this video is financial advice. You should always go out there and do your own due diligence and seek out professional financial advice from a licensed financial advisor for making any type of investment in cryptocurrency or the stock market. If you enjoyed this video, be sure and give it a thumbs up. Make sure you subscribe to the channel, and don't forget to check the description for a link where you can join the Patreon for just $7 a month. That gives you access to more frequent updates, helps to support the channel, and when we do get to 500 members, like I said, I will start releasing some pretty cool software tools. For those of you that don't know, that was my background. Before I became a trader 4 years ago, I owned a software development company, and that's what we did, was created tools in various markets. So this is James with Crypto Common Sense, reminding you to please trade safe.